Alright, so this is just a weekly recap of how I made just shy of $1,000 on this past trading week, using the ICT 2022 model. Now, essentially, okay, I took three total trades, one on Monday, one on Tuesday, and one on Thursday. Those are the three trades I took throughout the entire week. It's actually more trades than I typically will take in a week. I usually trade a max of 2 times. Typically, the way I trade, I'm looking for an intraday trade, and you have to be patient for those setups. And I tend to see 2 solid setups a week is what I tend to usually see. This week, there was 3 winning trades, and I'll go through them. So this first one on Monday here, disregard this weekly candle here, because this is a candle that wasn't available to me this previous Monday. Okay, this was this past week's candle, how it closed. Okay, I had this available to me on Monday. That was the previous week's candle, and I was bearish because we had we had closed below this previous weekly low. Okay, it showed me that it had intent to go lower because it disrespected order flow. So my weekly bias was bearish, and clearly, as you can see, I was correct. Now, on the daily, right, you'll get a better picture here because the daily doesn't show a previous. You'll get a better picture. So, anyways, again, bearish on the daily. However, I did come into the market on Monday with the idea that we could potentially start trading up into this daily fair value gap, even though we were bearish on the weekly. Okay, so I did have that in the back of my mind, and I was cautious with the trade I took because of that. Okay, but again, gotta remember, I'm bearish. I'm looking for a bearish setup on Monday. Okay, now you can see if I'm looking for bearishness. Now, I never concern myself too much with premium and discount, okay? I use it as a nice confluence, if my computer will work here. I use it as a nice confluence and a nice confirmation if, let's say I'm trying to buy and it's in a discount, I'll use it as a nice confluence, right? Or vice versa, right? Yeah, so I will take a trade regardless of if it's in a premium or not, or in a discount or not, depending on what I'm looking for. It's just a confirmation. So what I was looking for, okay, was I was looking for these highs to get taken, trade into this 4-hour fair value gap, and then see a little bit of a sell-off after that, after those equal highs are taken. You'll see them better on the hourly here, right? These equal highs. So I have the trade here already, so I don't have to mark it up. But this is the trade I took. I'll kind of walk you through it. So the way the 2022 model comes into play here is the fact that we get this sweep of this high, okay? So we swept it. Okay, now if I go to the 1 minute, this is where I get my entry. I entered with a limit order. Now you could, no, technically, okay, here's the deal. You could enter here with a limit order and you would have gotten wicked into this fair value gap there. I was afraid that it might not use that fair value gap, so I used the inversion fair value gap that you can see right here. that's what I used as a limit order. So once this candle closed decisively below that inversion fair value gap, or the bullish fair value gap here, I set my limit order for it. Then we tapped into it. My first take profit was right here, and like I said, I was going to be more conservative with this trade because I was of the understanding that we might begin to start trading up to that daily fair value gap instead of continuing lower. Before we continued lower, I should say. So I wanted to be careful with my trade, and I essentially sold, I think I had 5 contracts. I sold 2 or 3 here. I am understanding of the fact that looking back, this was too much of a reach for my take profit, if I'm being honest with you. Okay, this would have sufficed for sure. This, you know, I would have probably been where I would have put it. So yeah, just reached a bit too far with my take profit there, but still a winning trade because I took a majority of the contract, or a decent number of contracts here, and then I broke even the trade. Let's see what it does. I broke even the trade once we started consolidating near my entry point, and then you can see it would have taken us out. So that was the trade. Made $90 on that. I'll show proof at the end of this video for anyone that cares. But yeah, that was the first trade. Okay, so that was Monday's trade. Came in with a bearish bias, took a bearish trade. The day ended up actually being a bullish day, if I remember correctly. Right, this is the daily candle. So the day itself ended up being a bullish candle. Okay, so now coming into Tuesday, I was again bearish, but I had an understanding of the fact that yes, we could trade up into this daily fair value gap still. I was concerned about that throughout the entirety of the week. Okay, that is something I was just, you know, this is a drawn liquidity that could potentially happen. Regardless of if the week ends down, we could definitely trade into here before we started going. So I was nervous of that throughout the whole week. Well, not nervous, just a little bit cautious of it. That's all. It's good to be understanding of where price could go. Even though I was bearish for sure on the weekly and the daily, I just kept that in the back of my mind. We could trade into that daily fair value gap. Okay, now let me just find. Yeah, okay. So this was the second trade I took. Let's just, I want to bring us to 8. Oh, okay, it's already at 9. Now, what I was looking for, okay, I was looking for, again, I was bearish coming into today. And I was looking for another sweep of liquidity to the upside so I can get a short, right? That's the 2022 model. So I was looking for this high to get taken right here, and then hoping to continue lower from there. Again, this would have been respecting this, well, depending on how the 4-hour candle closed. If this was just a wick and then we closed inside this fair value gap, that 4-hour fair value gap would still be respected. We're trading inside of higher time frame PD array, which is what I'm trying to say. I look for that too. That's a big confluence for me. I want to be trading inside a higher time frame PD array, and I want my model to be found within one. So here we are trading in that 4-hour fair value gap, and so on the 15-minute, okay. Now I don't get all caught up in this potential. Oh, look, price is dropping. Market open. Oh no, I'm waiting. Okay, I need to see this high get taken first. Okay. So you see it get taken there. Okay. Now, doesn't produce a fair value gap. Nice break of structure, but no fair value gap yet. You want to be careful chasing price too. Okay, you want to be careful chasing price, but I had a relatively conservative take profit that I felt could be hit, and I thought my risk reward was still good enough to get in here where it wouldn't have been chasing it, chasing the trade. So finally left a fair value gap, limit order got us tapped in here. And then I made sure I put my stop loss above this previous high, and luckily I did so, give my trade enough breathing room. And I took partial profit here at this low, which is essentially the midway point to my take profit. And then I took some more contracts off here. When we reached here, you'll see, we'll reach here in a second. Okay. And my final take profit was this low here. I had one more contract left on there for that low to get taken, but you see we did not. And I had my stop at break even at this point, and it smacked us break even. Okay, but that's the beauty of managing a trade, right? I took my partials. I made sure I couldn't lose any money, and that it would only be a win once we were down here, even if this final take profit didn't get hit. Imagine if I didn't take partials. Imagine if I didn't manage a trade and put my stop loss to break even. Can you imagine the pain you'd feel, right? Came all the way down to here, and you were looking for a full take profit here and no partials before. I think I had 5 contracts on this trade. A full 5 contracts here. You're crazy. You're crazy. So that's the power of managing a trade, okay? So that was Tuesday's win. So, like I said, I traded Monday, Tuesday, and Thursday. So let's move on to Thursday. Okay. And this is the power of keeping it simple, right? I have a bearish bias. I'm not shooting for some crazy risk reward. I don't have tight stop losses. I'm not shooting for any crazy take profit. Albeit, I did say on Monday I could have been a little bit more conservative with my take profit. You can see I was here on Tuesday. Right, and I paid the price for not being more conservative on my take profit on Monday. Right, it's when you see these traders and they have a 1-to-13 risk reward ratio. That's for Instagram. Okay, it's for Instagram. They might have taken it and they might have won that trade, but I guarantee you, they're not profitable. I guarantee it. Or they have the best mentality that anyone can possibly have in trading. Like, they have the strongest mental game, because if you have if your average risk to reward ratio on a trade is 1-to-13, you're losing. Your win rate is like a 20% max. That's generous, actually. I'd go with 5%, and you'll still be profitable because you'll hit that 1-to-13 every once in a while. But the majority of people can't trade like that. So that's majority of the time when you see that on Instagram, it's for clicks, right? Right, the 1-to-1 risk to reward ratio, the 1-to-2s, they're not that sexy, right? So, but that's the reality of trading. If you want to be truly profitable. So, anyways, enough of that rambling. Let's move on here. So that's Wednesday's candle, okay. I didn't mean to do that, actually. Hang on. I don't want to skip a day like that. Wednesday. Okay, cool. Now let's go into Tuesday. All right. Make sure this is on here. Okay. Now I'll explain why I took a long and we'll get into it. So, all right. So, here's the reason for me taking a long. At this point in the week, on Thursday, okay, we dumped so hard on Wednesday that we actually ended up, this is the trading range on the weekly, sweep of a low, sweep of a high, this is the trading range. We ended up in a discount on this weekly range, and what do you know, this down candlestick, because it's in a discount, is an order block. So we were trading inside of a higher time frame bullish PD array on the weekly, and on top of that, we were trading inside of a daily fair value gap. Now, already got tapped into, but I give it respect because we didn't tap into the equilibrium of it yet. So 2 higher time frame PD arrays that we're trading inside of here that make me bullish, okay? This was, now I wouldn't target this because this is a pretty aggressive target, or a more long-term target, I should say. But this is the 4-hour trading range, okay? Now, you can see I only targeted these highs, okay? 1 to 1.5, nice and easy risk to reward ratio, okay? You know, it pays the bills. So, go to the 15-minute here. I was waiting for these lows to get taken. Okay, we took the lows, right? That's the sweep. We need that liquidity sweep, right, for the 2022 model. And then we'll go to the 1 minute. 1 minute is usually where I get my entry. Any time frame from the 1 to the 5 minute. Oh, maybe I didn't get my entry on the 1 minute. Oh yeah, I remember. All right, this is the 4 minute. This is the 4 minute entry here. So again, you might be wondering, oh, 2022 model, where's the fair value gap that we tapped into? Okay, I love fair value gaps, and if they're available to me, I'll use them. Okay, but there's another instance where I used an inverse fair value gap. Let me find the tool I need here. I'll find it eventually. Sorry, where is it? Is it really in here? Oh, I'm an idiot. Yeah, so inverse fair value gap right here. Okay, we ended up closing above it, as you can see, fairly convincingly. Monday's inverse fair value gap that I entered off of was definitely more convincing because of how quickly we shot through it. However, this is fairly convincing. It was convincing enough for me. So I set a limit order here for when we tap back into it. We tap back into it immediately. And I targeted, like I said, these highs on the hourly. I didn't take, so this actually on my account, I have a $50,000 Top Step account. This trade, if I was risking 1% of my account, which is what I do on every trade, I could only buy 1 contract. So I couldn't afford to take partials here. What I did was, once we passed this high, I set my stop loss to break even. And then it continued and hit my take profit. So that was the week. Okay, very successful week. I'll show the results here, just so you have an idea. So this is the month of July, but this is this past week here. That Monday trade for 90 bucks, Tuesday trade for just shy of 400, and then the Thursday trade for just around 450 there. So those were the trades for this week. Like I said, successful week. I'm doing quite well with this model. Any model will work, okay? Any model will work. It's just a matter of how patient you are, how disciplined you are. You notice here, look, I'm not taking a trade every day. When you see 3 trades, that doesn't mean I took 3 different trades. That means I took partials. When we got to a certain point, I took some contracts off. That's what it means. Every day here is one actual trade taken. So you see, I'm very, very conservative with when I take trades, right? I'm very disciplined in that sense.